Welcome, Stock Talk listeners. We're jumping straight in today.
Let's do it.
Apple's Q2 fiscal year 2025 financials, they reported on May 1st.
Yep.
Our plan to really dig into these numbers, figure out what's driving things, and, what it all means for Apple right now.
Okay, sounds good. So the big picture numbers first.
Yeah, let's start there.
All right, net sales hit $95.4 billion.
Okay, and how does that compare?
That's up 5.1% from the same quarter last year. So decent growth.
In net income.
Also up $24.8 billion, which is a 4.8% increase.
Okay, so sales up 5.1%, income up 4.8%. Pretty close.
Right. But then earnings per share, the EPS,
Yeah.
that jumped 7.8%.
Oh, interesting. Higher than net income growth.
Exactly. Came in at $1.65 per share.
So why the bigger jump in EPS then? What's going on there?
Well, that mostly comes down to Apple buying back its own shares.
The share repurchase program.
Exactly. They spent quite a bit in the first half of the fiscal year, $49.5 billion on buybacks. So fewer shares outstanding means the net income gets divided by a smaller number, pushing the EPS up faster.
Right. It concentrates the earnings. Makes sense. A strategy to boost shareholder value.
Precisely.
Okay, so beyond those headlines, what were the main engines of growth this quarter?
Services. No question. It was the real powerhouse.
How much growth did we see there?
Revenue surged 11.6% to $26.6 billion.
That's huge.
It is. And what's really significant is that services now makes up almost 28%, 27.9% to be exact,
Yep.
of Apple's total revenue.
28%. That's a massive slice of the pie now. Really shows that shift in their business model, doesn't it?
Absolutely. Less reliance on just hardware cycles, more on that ecosystem.
But it wasn't all services, right? I heard some hardware did surprisingly well.
You heard right. Mac revenue was solid, up 6.7% to $7.9 billion.
Okay, decent.
But iPad was the real standout. Revenue jumped 15.2%.
15% for iPad. Wow. What drove that? New models.
Yeah, that's the likely culprit.
Yeah.
The report doesn't spell it out, but they launched those new MacBook Pros with the M3 chip, and also the updated iPad Pro and Air, also with M-series chips. That new tech usually gets people buying.
Yeah, that fresh silicon definitely moves units. Okay, so Mac and iPad strong. But were there any weak spots? Any areas that struggled?
Yeah, a couple. Greater China revenue actually dipped slightly,
Oh.
down 2.3%, landing at $16.0 billion.
Any reasons given? China's such a key market.
The report mentions, increasing competition there, especially on the smartphone side.
Right. Lots of local players.
Yeah, and also just, broader macroeconomic pressures impacting spending. Definitely something to keep an eye on.
Absolutely. And what about other hardware categories, like wearables?
That segment, wearables, home and accessories, it saw a decline, down 4.9% to $7.5 billion.
Okay. Any thoughts on why? Product cycles, maybe?
Could be. Maybe people are holding onto their watches or AirPods a bit longer, waiting for a bigger upgrade.
Yeah, could be. It's a competitive space, too.
Definitely. It's tough to keep everything growing all the time.
True. Okay, so a bit of a mixed bag on the product side. Let's switch gears to profitability. How did the margins look?
Actually, pretty good. Gross margin improved. It went up to 47.1% from 46.6% last year.
Nice little bump. What's driving that improvement?
Well, partly it's that growing services business we talked about. Services generally have higher margins than hardware.
Right. Less physical cost of goods.
Exactly. And the report also mentions, operational efficiencies, maybe better supply chain management, things like that.
Okay. And did that flow through to operating income?
It did. Operating income was up 6.1% to $29.6 billion.
So operating margin improved too.
Yep, up to 31.0%. So good signs on the efficiency and profitability front.
In that services gross margin specifically, I remember seeing a really high number.
Oh, yeah, it's remarkable. 75.7% gross margin for services.
75%.
Yeah. Just shows how much financial leverage that segment gives them. Every dollar of services revenue really adds a lot more to the bottom line compared to hardware.
The power of digital. Okay, let's talk financial health. Cash pile still massive.
Still very, very strong. $132.9 billion in cash and marketable securities.
Wow. That's a lot of flexibility.
It is, though it's actually down a bit from the end of the last fiscal year.
Oh, why is that?
Primarily because they're returning so much capital to shareholders. We mentioned the $49.5 billion in buybacks.
Right.
They also paid out $7.6 billion in dividends just in the first half of this fiscal year.
So actively using that cash to reward investors.
Exactly. And they're still generating tons of cash, too. Operating cash flow for the first half was $53.9 billion.
Still a cash machine then. Okay, let's circle back quickly to the geographic performance. We talked about the dip in China. How did other regions fare?
Pretty well overall. The Americas had strong growth, up 8.2% to $40.3 billion.
Okay, solid.
Europe was more modest, up 1.4%, maybe some economic headwinds there still.
Possibly, yeah.
But Japan was a real highlight. Impressive growth, up 16.5% to $7.3 billion.
16% in Japan. Any idea why? Like exchange rates, maybe? Successful launches?
Could be a mix. Favorable currency, maybe new products really hit the mark there.
Interesting.
And the rest of Asia Pacific also did well, up 8.4%, also reaching $7.3 billion.
So really, it was mainly Greater China showing weakness, offset by strength elsewhere.
Pretty much, yeah.
Yeah.
A diverse picture geographically.
Okay. And one more dive into services, because that 11.6% growth is so key. What exactly is fueling that? You mentioned the ecosystem.
Right. Well, several things. First, just the sheer number of active Apple devices out there keeps growing. That's the foundation.
Bigger installed base.
Exactly. Then they mentioned crossing 1 billion paid subscriptions across all their platforms.
1 billion paid subs.
Yeah. Huge engagement. Plus, things like Apple Pay adoption keep increasing. Their advertising business, like in the App Store and Apple TV plus GRA, that's growing too. And just more content, better content on TV, plus music, arcade. It all adds up.
It really shows the flywheel effect, doesn't it? More devices, more potential service users, more revenue, which funds more content and services.
You nailed it. It's a powerful cycle. And strategically, it's so important for them.
How so?
It gives them that recurring, predictable revenue stream. It smooths out the bumps you inevitably get with hardware sales cycles. Investors love that stability.
Right, less volatility. Okay, so putting this all together, what does this Q2 report kind of signal about where Apple's heading? What are the opportunities, the potential risks?
Well, looking forward, the opportunities seem pretty clear, even if not explicitly stated as guidance. Continuing to grow services is obviously number one. Then there's AI. Integrating AI and machine learning more deeply into everything they do. That's huge potential.
Everyone's talking AI.
Exactly. And potentially new product categories down the line, AR, VR, whatever that might look like for Apple.
The long-rumored stuff.
Right. Plus, more growth in emerging markets and
Yeah.
pushing further into the enterprise space.
Yeah.
Lots of avenues.
Okay. And on the flip side, the challenges or risks.
Well, competition isn't going away, especially in China, as we saw.
Right.
Regulatory pressure is always there, too. Antitrust concerns, app store rules, etc.
Yeah, that seems constant.
There's also the fact that people might be holding onto their phones and devices longer, elongating replacement cycles. That could slow hardware growth.
True.
And, supply chain disruptions, while maybe better now, are always a potential risk. And the big one, just overall macroeconomic uncertainty.
Always a factor. Okay, so if we were to summarize the key takeaways from this Q2.
I'd say strong overall growth.
Yeah.
Definitely powered by that fantastic services performance.
Yeah.
Mac and iPad also showed some real strength, which is good to see.
Offsetting some weakness.
And Greater China and the wearable segment.
Yeah.
Those are the areas needing focus.
Got it. And financially?
Financially, very solid. Improving margins, strong cash flow, and significant returns to shareholders.
So strengths are services, margins, cash, key markets like Americas and Japan, and that MassiPad momentum.
Yeah, and focus areas are China, wearables, navigating regulation, executing on AI, and tapping emerging markets.
Fascinating stuff. It really paints a detailed picture. So here's a final thought for you listening.
Go on.
Apple's becoming so reliant on its huge installed base for that services growth, right? But they still need compelling hardware to bring people into that base or keep them there.
True. It's a balancing act.
So how do they strike that balance? Do these Q2 results with services booming but some hardware missed suggest maybe a subtle shift in their main priorities? What could that mean long term?
Good question. Definitely something to ponder.
Absolutely. Lots to think about. Thanks for tuning into this deep dive.